One Chinese insurtech firm just staked $154.7 million entirely in Bitcoin. No cash involved. Let's start with a bold crypto treasury move out of Shanghai. Zhibao, a Chinese insurtech company, just closed a $154.7 million private placement. And get this, every single dollar came in the form of Bitcoin. Investors didn't wire cash. They sent crypto directly, adding 2,380 BTC to Zhibao's balance sheet in one swoop. This positions Zhibao among a growing wave of Asian firms embracing a MicroStrategy-style Bitcoin treasury strategy. Rather than holding cash reserves, companies are increasingly parking value in crypto assets, betting on Bitcoin's long-term store of value narrative. For an insurtech firm, this is a striking pivot. Traditionally, these companies stick to conservative, low-risk balance sheets. What makes this even more notable is China's stance on cryptocurrency. Beijing has maintained strict bans on crypto trading and mining since 2021, yet firms like Zhibao appear to be operating through offshore or Hong Kong-linked structures to make these moves possible. It highlights a growing tension between official policy and corporate appetite for digital assets. The deal also signals confidence from institutional investors willing to commit Bitcoin rather than fiat, a sign that crypto-native capital is deepening in Asia's business world. Analysts will be watching whether more Chinese companies follow suit, potentially reshaping how corporate treasuries in the region approach digital assets going forward. Next, let's talk stablecoins. Ethena, the protocol behind the synthetic dollar USDe, announced a new $1 billion facility with trading firm FalconX. This move is designed to diversify how USD is backed, moving beyond its traditional reliance on crypto funding rates alone. For context, USDe has built its stability model around capturing funding rate arbitrage in perpetual futures markets, a strategy that works well in bullish conditions but can get shaky when funding rates turn negative. By bringing in FalconX as a new backing source, Ethena is spreading its risk across multiple revenue streams. This diversification effort comes as Ethena has grown into one of the largest synthetic dollar protocols in crypto, with billions in circulating supply. Analysts see this as an attempt to make USDe more resilient during volatile market conditions, potentially reducing the protocol's exposure to any single funding mechanism. Now to a controversial story involving the Trump family's crypto ventures. A platform called WorldClaw, tied to Trump-linked World Liberty Financial, is accepting the USD1 stablecoin for payments, while simultaneously offering access to AI models built by Chinese companies that the US government has flagged as national security risks. World Liberty Financial, backed by members of the Trump family, launched USD1 as its own stablecoin earlier this year. WorldClaw's integration of that stablecoin into a platform offering Chinese AI models puts the venture directly in the crosshairs of ongoing US-China tech tensions, especially around AI export controls and data security. US officials have repeatedly warned that certain Chinese AI models could pose risks around data privacy, censorship, and national security, prompting restrictions in government and enterprise use. The fact that a platform connected to the Trump family is offering these very models raises uncomfortable questions about oversight and potential conflicts of interest. This story is likely to draw scrutiny from lawmakers and regulators, especially given the ongoing debate over crypto regulation and foreign tech influence in the US. It underscores how tangled political, financial, and national security interests have become at the intersection of crypto and artificial intelligence. Switching to macro markets, all eyes are on the Federal Reserve as its policy decision comes into sharper focus. Bitcoin has held relatively steady through the uncertainty, while bond yields have surged, reflecting investor anxiety about where interest rates are headed next. Bond markets have been particularly volatile as traders try to parse signals from Fed officials about the pace of future rate moves. Rising yields typically pressure risk assets. Yet Bitcoin's stability in this environment is being read by some as a sign of growing resilience in crypto markets amid traditional market stress. The coming Fed decision will be closely watched not just by bond traders, but by crypto markets broadly. since interest rate policy has become a major driver of capital flows between traditional and digital assets. Investors are bracing for volatility across both markets as more clarity emerges. In regulatory news, the SEC is reportedly working on proposed rules aimed at bringing more clarity to crypto token fundraising. According to today's Morning Minute report, if these rules get formalized, they could pave the way for a new wave of initial coin offerings here in the United States. For years, ICOs have operated in a legal gray area in the US, with many projects choosing to launch overseas to avoid regulatory uncertainty. Clearer SEC guidelines could change that calculus, potentially bringing token fundraising activity back onshore and giving startups a more defined legal pathway to raise capital. If this framework materializes, it could mark one of the most significant shifts in US crypto regulation in years, opening doors for both retail and institutional participation in early-stage token sales. The industry will be watching closely for official details in the weeks ahead. Now to traditional markets, where the Treasury Department delivered a surprise that sent stocks, bonds, and gold all rallying together. On Wednesday, Treasury officials announced they'll more than double the size of government debt buybacks, aiming to ease mounting pressure on bond yields that had been climbing sharply. Buybacks essentially mean the government is repurchasing existing bonds, which helps absorb supply and can push yields lower. Following the announcement, yields dropped sharply while stock markets opened higher, and gold also caught a bid as investors recalibrated their expectations around interest rates and government debt management. This move highlights how sensitive markets remain to any signal from the Treasury about debt issuance and yield management. With bond markets having been under pressure for weeks, today's rally shows just how much relief investors felt at the prospect of reduced upward pressure on yields. Finally, let's talk housing. Warren Buffett's Berkshire Hathaway has reportedly made a significant bet on the U.S. housing market, boosting exposure to home builder-related stocks. The move comes at a time when builder stocks have been trading at notably cheap valuations following a prolonged housing market slowdown. Housing activity has been depressed for months amid high mortgage rates and affordability challenges, which has weighed heavily on builder stock prices. Berkshire's involvement has sparked interest from investors wondering whether this signals a turning point, given Buffett's reputation for identifying undervalued opportunities in beaten-down sectors. That said, market analysts caution that timing a rebound in housing is notoriously difficult, and cheap valuations alone don't guarantee near-term recovery. This story is a reminder that even high-profile institutional moves come with real uncertainty, and investors should always do their own research rather than following any single bet. That wraps up today's biggest stories in crypto, AI, and markets. So here's a question for you. Do you think Chinese companies like Zhibao pivoting entire treasuries into Bitcoin is a smart hedge or a risky gamble given Beijing's crypto restrictions? Drop your thoughts in the comments below. And if you want twice-weekly deep dives into the stories shaping finance and technology, make sure to subscribe so you never miss an update.